There we go. It's brightening up. Perfect. What's going on, family? Come on in, come on in, come on in, come on in. We had a pretty busy day today. So that just allowed me to have to push this back just slightly, but just know that it always is going to be at 3:30, ideally for right now. That is PST time. Okay. So PST, that's 6:30 Eastern Standard Time. At the latest, it used to be at 4 PST, and that would be 7 Eastern Standard Time. So whatever that equates to you around the world, those are our times for our Stock Summer Sundays. We got Toronto in the building. What's going on, Tan? Hopefully you're doing well, man. It's good to see you here. Anyone else who's tuning in live and or if we've got folks that are rewatching, all right? So we're going to be here for roughly around 45 minutes to an hour. Just noticing that these Stock Sermon Sundays, as for those that want to learn and come in live, it is a time to ask questions, ask anything you'd like, put it down below if you are having a tough time trading or you are winning, whatever it is, or you're curious about anything that you've heard on other YouTube videos, so on and so forth. This is the time to ask those things. Our Stock Summer Sundays intention is to prepare for the week ahead. So whether that be further out, long-term ideas for the year, which is what we're building out right now. So long-term investments in the stock market, what stocks are on a dip right now, and also what we have for our intra-week trading. All right, intra-week trading. So I appreciate y'all probably wondering, where is he? Like, I thought it was supposed to start 30 minutes ago. If you check my socials, the golf round was 5 hours. Okay, we started at 9 a.m. Okay, I'm about tired of these 5-6 hour golf rounds. That's why I don't play as much anymore, because the golf course is just getting flooded at this point. All right. So, anyways, without further ado, let's jump into it today. Let's get started and get up out of here. So welcome to our Stock Sermon Sunday. This is our stock sermon, our stock market analysis that we do for the week. And I appreciate anyone who is tuning in here for the first time. If you want to check any links down below following this or on my socials that are linked right here, the links will be in those bios. Or if you have any questions, you're more than welcome to join our newsletter. So you click the link right down below, join Leverage University. It should say newsletter there. And that's where you can message us before doing anything. Or if you're like, hey, I just want to be inside of a community after this YouTube channel. So that is where you want to go right after here. If you're already inside of Leverage University in our Discord, you already know how we do, as I like to say. So I'll touch on all those things throughout the entirety of the video. All right. So let's jump into it. Let's go ahead and share the screen and get into it today. All right. Running smoothly thus far, so that's a good thing. All right, so here's what I was talking about. Okay, so for anybody who's rewatching or whatnot, and just kind of getting this out of the way. Okay, this is not to sell anyone on anything. You do not have to. This is free value. I'm going to give as much game as I can here, but this is where you'd want to go. So if you're referring people or say, hey, where do I go to like learn more about what he's got going on and what you're doing, just tell them to join the newsletter right here. So it says join for free. Okay. And that just gives them an insight into a free welcome course to learn more about us. Right. It's like a five module course, how to set up your trading charts, what Leverage University is about, what do I learn, how does live trading work, can I do it if I'm busy, right? And learn more about us there. Today is the last day to use that code. So if you've got anybody that you have been talking to this about and wants to join, right, they would click right here on the analyst level and type in holiday 30. Okay, holiday 30 right there. As well as I have already some people that have reached out for this mentorship. So if you've not done so already, that price will be changing. So some people have already locked that in. No pressure at all, but that is a 6-week one-on-one with myself. Some people just need a little bit more touch base. They're like, hey, I just need a little bit more touch base. I'm that type of person. And if you're that type of person, that's great for you. It also gives you 1 year inside of Leverage University. So if you don't want to pay monthly anymore, you're tired of paying it monthly, you can just lock this in and say, hey, I'm tired of paying monthly. I would rather just get the coaching and do 1 year. All right. We'll be adding more things here, but the less, the better, in my opinion, right? Kind of treat it like a Chick-fil-A model. The less options and all that kind of stuff, the better, in my opinion. But for right now, this is what we have going on. All right. So let's do a recap really quickly of our data for the week. Okay, so I have it here. This is our Discord, so don't mind it if it looks confusing. But let's go into our economic calendar. And why do you see this title as CPI and PPI week? Okay, this is a data week that we have right here on Tuesday and Wednesday. We have consumer price index and producer price index. Those are inflation data reports that allows the Fed to decide if we're going to cut rates more aggressively or are we going to pause them, whatnot. Okay. Now on Friday, we got our non-farm payrolls employment data report. So we did have a lot of data last week and we kept grinding higher and continuing higher and ultimately finishing into another new all-time high for SPY and also IWM and the DIA or the Dow Jones. Okay. Now the NASDAQ or our main tech index, i.e. QQQ, that is still lagging behind, but it still has momentum to the upside. So the NASDAQ has not made a new all-time high. That is because tech ultimately had an amazing 2023, 24, and 25, right? And it's just settling. And in my opinion, what it's doing is settling headed into its massive earnings season. So if you don't know about earnings, I always say, 4 times a year, this is the time where you might want to sit back a little bit. So I've been lightly sized trading for those inside of Leverage University in our trading floor and those that join on here weekly. I have been lightly sized trading. Like I have not been going heavy, and I do that every start to the year. I do not load the boat personally. I do not go heavy. Essentially, I'm trying to get a read on how the first week, right, or the first month or the first couple of months are going for the year, kind of stacking up some wins, getting the momentum, getting a read, because a lot of times you focus, and we focus sometimes too much on short-term trading, which is great. We love doing that, right? We do that every day, Monday through Friday, unless I'm off or there's a holiday. Okay, what could have happened if you potentially had looked back at Robinhood at the beginning of 2025? If you would have looked a little closer on and waited patiently for Google sitting around 130 to 150, and now it's $300 plus, right? So the beginning of the year, as much as we want to focus on short-term trading, which we will be doing, do not negate, and this is what we'll start mentioning more and more on these Stock Sermon Sundays for January, what are the moves for 2026, right? And in my opinion, healthcare is going to be, it's not the sexiest thing, as we say, the UNHs, the Centenes, right? And a lot of the consumer discretionary. So the Kavas, the CMGs or Chipotle, some people are looking at Nike, even Disney, right? Stuff like that it's like, oh, I haven't really done that in a minute. Like Starbucks, stuff that people are kind of questioning on, like, can those really survive when we're, struggling a little bit with people trying to pay for stuff and whatnot? The economy's not doing well. What about big tech, right? So we have to look a little bit outside of the box. And there's also some sectors that maybe you're more than welcome to put down below in the chat that you may be looking at, which are the quantum stocks. What about space? What about, OpenAI and SpaceX and all these new IPOs that will be coming out? We'll look into those as they start coming. But yes, we may need to, dig a little bit deeper in our research to look for some of those oddballs in the markets. A lot of the big quantum stocks, a lot of the big AI stocks that boomed last year, the APLDs, the Ionics, you can go a whole list. So I do not want to overload too many people because, so there are people that join here for the first time. So I want to make sure that they're like, man, okay, this is a lot already. Right. So just know I'll explain this as we go, but just giving you kind of a little bit of a roadmap of how we're going to, go throughout this Stock Sermon Sunday. Okay. So for this week, for intra week trading, we need to be prepared for Tuesday and Wednesday are going to be the best trading days of the week. Thursday as well, because we'll already have these 2 data reports out of the way, and Thursday should be nice. Also TSM. So Taiwan Semiconductor will be recording their earnings on Thursday. Okay. So let's go to here and look at the earnings report, which is the next up on the docket of what we want to look at. Okay. And we're going to start off with the banks and some airlines. Okay. So JP Morgan on Tuesday morning before open, we've got Delta. Okay. Wells Fargo, Citibank, Bank of America. And then here's our big, kind of stack right here, because all of these would have reported. Our Thursday stack, TopOne Semiconductors right there, TSM, Morgan Stanley, Goldman Sachs, BlackRock, right? And then we have PNC regions and some smaller regional banks there, okay? So the banks are leading off the earnings season. We're heading into earnings season, and during earnings season, we can make a lot of money, okay? So I do have a couple of videos on the channel that you can go watch around how to trade earnings. To kind of give you a heads up, we typically like to trade earnings, meaning if one of these companies presents a opportunity to trade, we ideally like to trade post earnings. Okay. So that means on Thursday before the open, when TSM reports, we can trade TSM, Morgan Stanley, Goldman Sachs, any of these if they have good setups, if we're trying to take a day trade on them. Okay. So the same thing with JP Morgan. We'd want to trade ideally potentially on Tuesday and into Wednesday. Okay, so post the earnings report. So if they report on the after close piece, we'd want to wait until the next day. Okay, so the main ones that I personally want to watch, definitely JP Morgan for sure, but more so I like trading semiconductors. So I will be watching TSM. So that will be my main kind of trading day. I have traded Citi before. It's been pretty decent. But just to kind of let you know, for those that are inside of our trading room and those that will be joining soon with us, that I will be ideally looking at my normal stocks, not venturing off too far from it, looking all the way around, getting distracted, is I would like to trade the semiconductors or TSM ideally on Thursday morning. And maybe Morgan Stanley presents some opportunities. Their contracts are pretty reasonably priced. Okay. Now, the key thing here as well is when you see these earnings report, sometimes the earnings setup comes the following week, okay? So some of these that pass, you may want to put them on your watch list for the following week. So just say TSM has a really good setup, right, to trade for maybe a day trade or something. A lot of the times the best setups on earnings will be sometimes the following week, okay? So I will be keeping these on watch for the week of the 19th, which is the next week, okay? So just want to mention that for our earnings. Okay. Now, a couple other things that are kind of looming that we need to just be aware of is that we still have this tariff decision. So if we type in tariff here, okay, or if I type in here, tariff Supreme Court, okay. A Supreme Court ruling to undo Trump tariffs would be fastest way to revive the job market, and Supreme Court sets Wednesday for next opinions amid tariff watch. Okay, so we will have more opinionated kind of Supreme Court rulings of, whether the tariffs continue or they don't continue. So we have to be aware of this stuff because news will release out of nowhere, just like they did last year. News will release out of nowhere, and we're not aware of what's going to happen or why these things happen. So as I jump on the charts here, just make sure okay, we're still good there. Just saying hello to everybody. Okay, cool. We jump on the SPY chart here, and I'm going to do a full analysis on SPY. Okay, here is the last kind of tariff kind of decision that we had back in October. Okay, so we were bullish, running new all-time highs, and then out of nowhere, a tariff decision comes in and we tank. So we have to be aware of these things and then just react to the levels. As I always say, keep your head on a swivel, okay? Presenting that each day is a new day. So right now, if you saw the banner of today, the bulls have ultimate control, okay? They have ultimate control. So if you feel comfortable and if we are bullish and you want to continue this bullish nature, we want to hold up ultimately 690 and ultimately 687. Okay. 687, 690. That's our bullish kind of pennant that broke new all-time highs right there. Okay. Now, if I go left, same thing over here. Okay. So I told my group last week, and if you guys watched and ladies watched the previous video that I did, I got a lot of good response from that because people just need to hear the realistic things about trading, because I don't consider myself this YouTube guru or any type of guru. I hate that term, but we do consider ourselves professionals, right? And experts based off of experience. So based off of experience, we're human beings, meaning I did not have a good trading week last week. I just didn't, right? But I had an awesome Q4 trading week, or excuse me, trading quarter. Okay. So if you look at the broad scope of things, you don't let one day or 1 week kind of shake you out of your normal way of showing up to the market. That means that just because last week we were going up and we're bullish does not mean I don't keep my head on a swivel saying I've got to respect these levels and make sure they continuously hold. If I see them hold throughout the week, right, and I get another weekly bar that starts printing new highs and going higher, all right, then I will remain in that bullish stance and we're good to go and cool. Every pullback gets bought. We keep stop losses below. I would even move it down to 686. Okay, 686. Okay. Everyone good with that? Can I get a 5 in the chat? So again, I always make it apparent that I don't know who's listening and who's kind of watching, and maybe you have a sentiment that I'm always kind of keeping this head on a swivel or beware of this, because I've seen it before, right? So you don't want to be, again, so high that you forget about following your process, and you don't want to be so low that you say, well, it didn't work last week, so maybe I'll try this week, right? You react how the market reacts. And right now, if you want to stand with the bullish stance, any pullback that we have, you want to react off of 690 ultimately right now, because that holds this bullish trend. But if any point we start getting below that 690, just be a little bit more cautious, okay? That the market is trending up and it might want to come deeper down below. So if we're bullish, pull back, call options, meaning wait for the pullback, watch for it to hold on your hourly 30-minute, 15-minute, right? And continuously try to catch that bullish strength back up. And you would keep your stop loss saying the moment that you jump in and it starts going like this, you need to respect your stop loss, okay? Stop loss meaning if you get into calls and it starts going lower, it's like, well, last week it worked. Every pullback went higher and it keeps going and it keeps going, right? Something like that. And we get some type of tariff news or decision. You need to respect that stop loss, because last week calls worked and pullbacks worked, but the moment they don't, right? Cool. And we need to switch our sentiment. Just like last week for me, I was waiting for a deeper pullback. So I called this, right? I was like, okay, here it is, right? Caught the little pullback back down, right? And I was expecting it to go a little bit lower, right? To fill that unfilled gap right there underneath 686. And it just didn't. So that's cool. It kept going. All right. My thesis didn't work this week. That's fine. All right. So I'll keep the same process, hold 690, hold 687, and we can go higher. But ultimately, we want to stay above 690 because that's that previous high there. And necessarily, you wouldn't want to fall all the way back down into this 687, because now you've broken back underneath here and you've kind of broken that trend. So watch out for 690 pullbacks. As long as that holds, we can remain bullish. Okay. Now, where's the target to the upside? Ultimately, everyone I think knows at this point. If you don't, SPY or most people are trying to get it to this 700 target. Okay. So if CPI and PPI data are good, earnings start reporting really, really well for the financials, JP Morgan, Morgan Stanley, right? If finance, which has been performing very, very well in its earnings season, then that is going to most likely try to take us into new highs, into new highs, into new highs. And we'll do one of those like Friday and just start trending higher and trending higher and trending higher to try to get to that 700 mark. Okay. So this is the target that most people / big money is trying to get it to, because that's what Tom Lee said. That's what the market was predicted to get to at the end of 2025. SPY 700, SPY 700, SPY 700. Okay. So that's what most people are trying to get that to before maybe reacting in any type of way. All right. Cool. So there's SPY. There's our levels. Pretty clean, in my opinion. Maybe I'd move it up a little bit even to this 688 and some change, which would be this zone right here. Okay. So if you're marking your charts like myself and you're following along, mark those zones, that 688 ideally, and then this 690 zone will be your pullback zone. If that fails and gets underneath there with some type of engulfing candle, just know that that's a failure right there, and we have a gap below that it might try to come back to this 680 to 683. Okay. Ultimately, still going higher. All right. Cool. Let's go to Qs. Okay. So remember when I just stated that earlier on, I was talking about how Qs, or the NASDAQ, okay, primarily the tech index, is very bullish, right? But also we have to respect the level of this 628, okay? 628.39 or just 628. Most people are trying to say, well, let's just get to 630, right? There's a gap up here. Let's just get to that 630, okay? So if we clear above this high, if you want to mark it, we clear above that 628 and some change, right? We've got a little gap to fill. Ultimately, it's going to fill that gap and try to go to 630, okay? And the mark, as long as it holds up that 628 and then it gets above 630, we can trend up to and stair step back up to these levels here, 632, 633, and ultimately back to try to take out all-time highs for the Qs. Okay, looking something like that. All right. So trade level to level, but be mindful that we still have to respect the levels that are there for right now. Okay. So if you're bullish, what do you want to do on the Qs is you want to watch for ultimately this big bounce right here and then 620 to 621. Okay. That whole zone right here, you can see left where it did last time, right here where it do 618. And we marked these levels last Sunday. If you remember, I said wait for the pullback to 618, 620. If you follow those rules, you won, right? But last week, in my opinion, was a little bit choppy. I mean, people say that this was easy to trade. Like, Brian, it went down into 618, 620. But after seeing that big failure, that's not easy to just jump into calls, not thinking that that might happen, right? So after seeing that big failure and coming in the next day and seeing that big bounce off that area, okay, cool. As aggressively as that bounce, that tells me that, cool, we're still bullish. It wasn't a weak bounce, but we still got to look at those levels above, okay? So we got minor levels here on Qs, which will be 625, okay? Now, for those of you that are like, Brian, I see what you're seeing. I think we can, I think we should and could come lower and fail back below. I believe so too, but until it happens, right, we got to wait on it. And again, trade your setup. I was talking to the community about that, and I mentioned in the last video, trade your setup. So what you'll hear a lot of times is trade the trend, right? Trade the trend. But I've talked about it before. Depending on the type of trader or short-term investor you want to be, right? If you see something that you can capitalize on, sometimes you have to wait for your setup, right? So some people might want to scalp this up and continue higher and trade the trend and trade the trend. And someone else might say, hey, I don't really like the fact that we have unfilled gaps. I don't like that. I'd rather just wait to see what happens, and I'd rather trap people and bring this all the way back down, kind of like we did back over here. So neither one of them is wrong, right? Because the moment that happens, guess who's going to capitalize? The person who waited on their setup. If someone says, hey, I want to just keep taking it higher until it doesn't work anymore, then that person wins. But it's about the disciplined trader / investors that says, I'm going to wait for my particular setup because regardless, my win percentage is higher, the better my setup that I take and I wait for. Does that make sense for everybody? Okay. So there's not a right or wrong way of trading more specifically. So if we're short-term trading, and we'll talk about long-term investing for sure, about other things that are coming up in the market that you should look for big leap options, or what, Brian, is a good potential share position right now that could play out in the next 3 months to 6 months. I'm kind of busy at the beginning of the year. I don't want to stress out. I got other stuff going on, right? So neither one is wrong. So a person could trade this, and another person could say, I'm going to take off, right? I'm not going to trade Monday. I'm not going to trade Tuesday. I'm not going to trade Wednesday. I'm just going to wait until my setup comes to me, right? And y'all know, for those that have seen me live trade, that when I get my setup, it's game over. It's pretty much game over. I'm 100% trades, 50% trades, back to back to back to back to back. But when I'm a little uncertain of where it's going or it keeps grinding, I don't do well on pop and grinds. This is a pop, grind, pop, gap up, grind, pull back, grind. I don't do well in those, right? Doesn't mean I can't trade them. It's just I'm a little bit kind of hesitant on getting into them because I know what a deeper pullback looks like, right? So this was an awesome pullback where we know that is oversold right there. And you can see on the RSI, an hourly oversold. That right there was nice. Okay. This on an RSI hourly overbought, pulled back again, slightly overbought. Now, someone might say, or someone might look at this QQQ chart, and for those that are a little bit more advanced that maybe understand RSI and MACD, I have a video on the channel about that. You may look at it and say, Brian, is that a bearish divergence? Like, is that a lower high on the RSI that we need to be aware of? And I'm like, yeah, if you want to go that technical, we could look at that, right? Lower high, lower high, lower high on the RSI, and the market is going higher low, higher low. That is technically a bearish divergence, meaning it's going in the opposite direction of the market trending upwards. Well, what does that mean? That typically means that you will have some type of trap that comes back down and pulls back even further than you think, and you're wondering what's going on, okay? So bullish until otherwise. Bullish until otherwise. This has saved a lot of people, right, on this channel, in my opinion, by stating the facts of what's possible instead of just saying, do this, do that, right? We're bullish, just keep going higher. Like, if it pulls back, just keep buying more, and then the pullback gets deeper and they don't know where it's going, right? Cool. Let me check on everybody. How's everybody doing? Sadly, I found you too late. Yeah, I understand. I've had that a lot lately. I proudly say I've had that a lot lately. I appreciate the kind words. I don't know what I'm doing, but apparently I'm over delivering. I don't know. Can I get a 5 in the chat again? Does everyone understand and good with SPY and QQQ? Does anyone have any qualms, anything that you disagree on? Maybe you say, hey, I don't see that. You have some different levels that you want to, chime in on. You're more than welcome to down in the chat. So I'll check that in a second. IWM, okay? Beautiful, beautiful bullish flag here on IWM from the start of the year, okay? So we see that nice hold of 246. Did I expect it to just catapult off of 246 right away on the first week of trading in 2026? No. I didn't expect for this to just one weekly candle just straight up off of this bull flag. Did not expect that, right? And if we go into a daily, do you see how like aggressive it was? It was almost just like, hey, New Year starts, bam, right? So when you get that, what's our rule of thumb? We say we don't chase, and as aggressive as it goes up, right? You want to watch where the true supports are, okay? So the supports are typically gathered on a higher time frame. So that means a daily and a weekly time frame at this point. So if I were to look at this and I would say, well, where is the support now? I would say 257, right? Right at that previous high would be that soft support. That just simply means that it still, could fail, but right now it is a soft support because it hasn't retested it yet, okay? So we broke on a weekly chart here, and if we get a weekly pullback or just a slight pullback to start off the week, right, we want to see that 257 hold, right? That's how the week would potentially start off. It could go a little bit higher first, and we gather more strength and we go higher, but eventually at any point, look at these weekly candles, right? Do you see the strength on the weekly candles right here? IWM weekly, IWM weekly, IWM weekly, and then you will eventually have some red weeks. Okay. So for those that are wondering, when's the pullback coming for me to actually get in? Ideally, you want to see some red to start off the week or some red throughout the weeks, very similar to here. Okay. We have a couple of greens, couple of greens, couple of greens, and then we have a sharp red week. Okay. Couple of greens. And then we have 1, 2, 3, 4 red weeks. 1, 2, 3 green, 1, 2, 3 red. Okay. So here's our first green. We could continue up a little bit higher. We could continue up a little bit higher, but eventually you will have a deeper pullback that looks something like these. Okay. Eventually. Okay. And that's where you get your firm supports. Okay. Do you see how firm this support is at 246? We had a weekly pullback that held 246. We had another weekly pullback here, 250, and then we held 246. So that is what a firm support looks like. Okay. That is what a firm support looks like, is that we have weekly holds of that level. Okay. Do we have any firm supports that we can really trust on IWM just yet on a weekly? In my opinion, no, because we haven't retested it and held some weekly red candles to really prove that it's true. Okay. But if you want to keep it very simple, I would say 250 to 251, right, would be your next firm support that IWM would want to come back and test. I think this is very soft. I think that can fail pretty easily, but it's still a support for right now because we've broken into new all-time highs. Okay. But I would say 250 to 251 would be a better, firmer support, because that was a weekly high right there that we couldn't get above. We broke right there, and we could have a weekly retest that comes all the way back down to here like that. Okay. And that would firm up that support. And if you look on this trend line here, I'm not too much big of a trend line person, but that would be a firmer, higher low, in my opinion, because you would have a higher low weekly that's higher than these. Okay. And we could continue up on this trend and see if that truly wants to hold. Okay. Does that make sense? Okay. So that's what you'll hear me say in our live trading group about, I don't really like the gap up and goes. I don't like the continuation. You're more than welcome to continue. I rally on our group saying, man, keep winning, keep winning. I'll call out the trades, but I'm also trading my real money, right? So if I'm trading my real money, I want to be just as confident in my trades that I take that anyone else does. And that's the difference, that what I try to coach, teach, mentor on, is giving people the confidence to say, what do you see? What do you like to take? What trades are you comfortable taking? Right? And I think that's where it gets a little bit mixed when people are following folks or in live trading groups. Sometimes it's almost just like follow the leader, right? But what I do, if you're not inside of our group just yet, is I tell and coach and teach why I'm getting into a trade, what my rationale is, okay, how it should play out. And if I don't see it, I cut it. If it works and it's working out in my favor, then the person is more confident the next time they see that. They're like, ooh, he explained it all the way through. Here's how it played out. Here's how it worked. That worked exactly how we thought, right? That gives you, the trader, or the person that's trying to learn more specifically, confidence in yourself, not just the blame of, or maybe kind of have a little bit of ill will, right? I think that's why hopefully y'all feel this way that are inside of the group, that, man, I'm cool, right? If I take a little bit of a loss, I understood why, I feel good, right? That was my fault. I should have cut it earlier. Cool. I understood the trade. We talked about it, right? Versus just saying, take this, we're out, we lost, and then walk away. That's not what we want to do, right? We don't want to take trades and just walk away like, what just happened? We just lost money and we're just gonna accept that. Right? So just want to let y'all know that that's the type of energy that we bring. Okay. So 257 IWM, ultimately we have 252 to 250 as long as that holds. And for those of you that follow the gaps a little bit, okay, it's got to fail below these things to even consider, but we do have a little gap that didn't get filled right there on IWM if we do have some type of tariff, or it has to be some type of like extremely bad CPI report that says, hey, we don't need rate cuts. Okay. So there's a lot of folks that don't really know much about. Maybe I need to do a whole separate video about IWM, not IBM. IWM are the small cap companies. So go do your own due diligence on IWM, because IWM houses a lot of stocks, and it may give you an insight, right, as to what stocks may be coming up. So NVIDIA, AMD, like all these big companies that are on the rise for AI, right? They were once in or once a mid cap, small cap company at some point in time, right? So IWM are the small mid cap companies, and a lot of the companies that are also speculative, right? Meaning companies that people are looking to take off at some point, such as Credo Technologies, okay, is at the top of IWM, right? Do you see how I just went straight up off of 2025 in the summer from 45 to 213? That's pretty quick, right? What is Credo Technologies? I know what it is, but somebody might not know what that is. That's included in IWM. So just go type in IWM Holdings, okay? Start researching some of the top companies, some of the top movers, and you will start finding companies potentially that you can do some due diligence and research on, and it may be the next Palantir, right? It may be the next sleeper, the company that just goes out of nowhere, and then in the next 5 years, we're trading Credo Technologies versus Palantir, right? Whatever it is. So just wanted to mention that IWM is moving because it houses a lot of those companies. Second, IWM is also very sensitive to rate cuts and rate hikes and rate pauses. So if we have rate cut decisions or rate decisions that are on the table, IWM reacts very sensitively to that. Okay. So I will summarize it here and get off of IWM, the indexes, and we'll move into our stocks. But IWM, if the market has some type of rate pause or doesn't give an aggressive rate cut at the next rate meeting, IWM could see a little bit of a pullback from there. Okay. Why? Because we had good unemployment data, right? The labor market is steady right now. It started off good for the report, right? That doesn't incentivize the Fed to cut more rates. Does that make sense? So this move was pretty much already priced in, right? This SPY move, this QQQ move was already kind of priced in, but the data suggests that we might not have an aggressive rate cut. And the CPI and PPI report will tell us that. Okay. So if those reports are really, really good, that's good for the overall market, right? But it's not necessarily the best for the Fed saying, hey, we're going to cut more rates. Just giving a heads up of some of the fundamentals. Okay. Let's jump into the VIX really quick. The VIX is our volatility index. It gives us an idea of potentially where some volatility may come in. So if we look left here on the VIX, when the VIX spikes, the market typically corrects. All right. So if you look right here on the 12th of December and right here on the 17th of December, if we look at SPY, what happened on those days? Right here. Yeah, right here. That's when the VIX spiked and the SPY pulled back. Okay. So if you've never paid attention to the VIX, okay, is our volatility index. When the VIX gets oversold back into support, that's when we typically pick up volatility. So the VIX gets back into the 13s and pulls back like this and pulls back even more, then the market will continue to trend higher. So the VIX goes in the opposite direction typically of SPY and QQQ. So if I see the VIX cool off down here and the market's trending higher, I know ultimately that eventually the VIX is going to spike and the market is going to drastically pull back. Okay. Look what happened here. That was on that pullback week and we spiked on the VIX, and that's when the market kind of quote unquote corrected in December. Okay. So just a little bit of a insight there to know potentially when a pullback might come in. If you look right there, there's our October, there's our November. So you see when the VIX gets in support ranges, we use the chart the same way. Look right here, the VIX got into support, it spiked, and what happened in November? The market pulled back and corrected pretty heavily in November, okay? And ever since then, the VIX has been grinding down, cooling off, and eventually when the VIX gets back into a support range, will probably spike again and the market will correct again, okay? So that tells me, the VIX tells me that the market will probably trend up a little bit higher. The CPI report will probably be decent, and then we got a gap fill on the VIX. So give us a little bit more leg up, continue to trend higher, that's fine, and then the corrected move will come. All right, let's jump into some of our top stocks here, okay? So this week we got relative strength on... I'll jump right into Tesla, okay? It's not what I normally do, okay? But Tesla, I was watching towards the end of the week, and we got this nice kind of gradual move, and a lot of people were asking, when is it time for Tesla to maybe bounce and trend back to the upside? It's got earnings at the end of the month. So maybe pay attention to Tesla. If you don't typically trade Tesla, I gave this out. TSLL is a quote-unquote cheaper version, okay? It's just the leveraged 2x version of Tesla. So you can see that TSLL is $18, Tesla is $440. But TSLL, same chart as Tesla, as you can see, same chart. So if you can chart Tesla out and you see a good trade on Tesla, but you don't have the funds or don't want to, put that into Tesla necessarily, you could put TSLL on your watch. And if you want to trade options on it and or shares, okay, you could put time on TSLL. As you can see, the contracts are very inexpensive for middle of February. And you can see on the left here, calls. Look at those right there. The 20 calls are $160. Okay, 19 calls, right in the money, right? But if I go to Tesla and want to put time on the contract for February 20th, those contracts are roughly $2,000. Okay. So it's a little bit of a safer way to trade Tesla if you're not comfortable trading that volatility, or you don't necessarily like Tesla, but you see a great setup on it, right? But Tesla ultimately breaking out of this trend holds 440. Okay, holds 440. You can look at Tesla to continue back to 450, breaks 450. We'll probably eventually, if the CPI data is pretty decent, right? We can probably trim back up towards this 475. There's a little bit of a gap, and ultimately back. People are trying to get Tesla to 500. Okay, so Tesla, watch out for it. Nice hold there on 430. You can see that nice previous high there. Some support sitting there. Okay, so Tesla breaks above the previous weekly high, which is 457, or breaks above that 450. We can maybe get some movement back up to those 470s plus. Okay, so watch out for that if you're a Tesla trader. If you want to watch those levels, 430 to 440, pull back there, hold, and then rotate back to the highs. Okay, let's jump into Amazon. Amazon, big winner as well from last week. I don't know how many, let me know down below if you remember me saying this, that Amazon was going to be a big 2026 winner, in my opinion. Okay, beautiful. Starting off the year on an uptick there, monthly chart, breaking back above that 235 to 240. So if you need a support to maybe watch for a pullback that could be really solid, is watch for this kind of 240, 238, maybe even 235 pullback. You can see how much resistance was there, which would firm up a weekly support. So I'll talk about the upside continuing higher. But if you want to watch for a pullback, where can Amazon pull back to if you miss this move? Is somehow wherever it decides to stop running higher, which I think 250 is in sight easily. Okay. Can Amazon give the pullback, a weekly pullback back to this 235, 240? It looks something like that, a little bit more, hold that, and then we go higher. Okay. Because in my opinion, this was nice, but it's also chasing as aggressive as that weekly candle is. Look left, you see how aggressive this weekly candle was, and people went chasing. And what did Amazon do? A couple of weekly pullbacks and ultimately failed back below. Okay, went from 260 all the way back to 225. Okay, so Amazon, why is it running? A couple of good news reports, but also their earnings season is coming up. So Amazon runs into earnings, 260, has a good earnings report. Eventually it'll pull back. So we'll just have to see and wait, or wait and see, excuse me. But 235, 240 would be that ideal pullback zone. Okay, this is one of those that I talk about pop and grinds. It's hard to catch, but ultimately, if you're one of those that just trades the trend and holds it, pull back, it's bullish, why trade against it? But it's definitely difficult, in my opinion, based on my trading style, to pop and then grind higher like that, right? And you just keep going up. That can be tough to trade, okay? In my opinion, because it's hard to find a firm support that you really want it to pull back to here, because a break and a retest will be a break ideally, and then a weekly retest of that 235. And we never got that big retest like that. Okay. And we don't have to, but as you trade, that's what you ideally want to see. Okay. So Amazon relative strength, it is extremely bullish right now. It's looking for 250. So if you want a little bit more out of Amazon, watch for that 250 mark. That is a big level above. We could have some reactions at this level. Look left, see right there, that 250 approaching what happened last time at 250, right? There's some sellers that will, or profit takers that will be at that 250 level to take some profits and also potentially pull it back. All right. So watch out for the 250 above. We shall see what it reacts and looks like. Okay. What else? Relative strength. Google relative strength. Okay. Trying to rotate up here, 330, trying to take it out. It did struggle a little bit towards the end of the day at this 330. So Google is still relatively strong. I would watch for this 320 to 321. That looks like it firmed up on a higher time frame, that 320 to 321. Okay, that right there, look left, see those previous highs hold up, and on a higher time frame, 4 hour daily, you can see how it bounced off of there. So that retest level would be awesome, 320 to 322. And for those that like to trade the downside, does that mean we can trade it back down to that level? Yes. You know, if we get some, failures, we had a little gap fill at 325. Could we see that? Yeah, it's very much possible. Okay, but that would firm up that support. Okay, cool. Let me check the chat, make sure everybody's good. Absolutely, that makes sense. Your gap fill video really helped me understand so much. Google this week was such a good example of it. Yeah, exactly. That gap fill video has been very, very popular. I figured it would be, because every time I mention it, people are like, I had no idea about no daggone gaps. I now understand why the market pulled back so aggressively, because there were gaps to fill. All right. Let's jump into, I'll do some honorable mentions. I'm not really interested right now in Microsoft and Meta, just trying to see, I watch them trying to see what they're doing, but just not, I've been turning on the moving averages, just watching them right now. Okay. Microsoft holding up this 470 right now, trying to decide what it wants to do. Do I think this is bullish? Yeah, but it needs to get back above this 480 and start building some strength. So Microsoft, I would say it looks a little bit better than Meta, but some people might consider this a bull flag on Meta, maybe. Meta needs to clear back above 680. That would get it back above this level. So those are honorable mentions if you're interested in those, but just kind of keeping those on watch to see if they get some momentum. All right. NVIDIA, trusted semiconductors. The semiconductors were the weakest sector, but that does not mean they are out and done, right? The weakest sector is what people don't pay attention to, kind of like Amazon. It was a sleeper. Kind of like Google. It was a sleeper. When people aren't paying attention, they run over to all the strong stocks and miss out and say, man, NVIDIA is awful. It's not doing what it needs to be doing. MU's the new winner. And the next thing you know, NVIDIA is not going nowhere right now. Okay. It's just settling in, trying to gain a support. People are profit taking. Is it a little bit overextended? Maybe. But it has earnings coming up in a couple of months, or excuse me, yeah, at the end of February. So if we do get a deeper pullback on NVIDIA, I believe that is an awesome opportunity headed into their earnings. You ideally don't want it to run right now into earnings because of the PE ratio, their earnings per share, right? If it pulls back into the low 170s and earnings approaching, in my opinion, that's an awesome opportunity. So you actually want NVIDIA to pull back like that aggressively. People count it out, and then we can rotate it back because we know what happened last earnings, how it popped. Could this be the time that NVIDIA actually continues? Right? Go listen to that CES event here in Vegas. They had awesome things to say. They had awesome stuff always underneath their sleeve, right? With Jensen at the helm, I think NVIDIA is just sitting here waiting on that positive news that they always have. So keep your eye on NVIDIA, as some people may be a little bit frustrated with it, that it's not going back to 200, right? They were so excited here last earnings and it popped down, that kind of stuff. And that's when people start counting it out. All right. So NVIDIA in the short term right now, we know our levels. What does this look like? We've got underbelly support now turned resistance. That means that 187, right? Do you see how it broke underneath, turned it into a resistance? So that 187 is going to be very key. If we reclaim it and it holds this 183 and we pop back up, right? Then I can turn that 187 back into support. And then we're headed back to 190 and ultimately back to that 193 that we're trying to take out. Okay. So that is a possibility. We've seen it before, but right now, okay, NVIDIA might want this gap fill below, and that there's another gap fill below there. Okay. So if that's a bear flag, we get below that 183, we can start trending. There's your 180. And then there's a very low volume here, in my opinion. And also if I turn the volume profile, right, volume very low below that kind of 182, 183 level. Okay. NVIDIA can start trending back towards the mid 170s. And then we can pick up the dip there. All right. So watch out for NVIDIA right now. Short-term weakness, pay attention to it. But if you want to just wait, I would say that is an awesome opportunity of how you would prepare for earnings season. So if you want to save your capital, say, man, I'm just going to watch some of these bigger tech companies to see what they're doing leading into earnings. All right. Cool. AMD. Whew, AMD is just, I think people want this gap fill so bad at this point. Overnight, it's at 201, gets underneath 200. I mean, we keep saying this gap fill is going to get done, and every time it gets going, pop, right? But this time, it's kind of third time's a charm. Can AMD get below the 200 and hold underneath 200 and start pressing into this gap, which starts right at about 196? So if the market gets a little bit weak or pulls back a little bit with CPI approaching, look out for some of these weak stocks that you can capitalize back on the downside, which would be, in my opinion, some of the semis, more specifically NVIDIA and AMD. All right. I'll take a pause right there because I'm rolling through these pretty quickly, which is my goal. But what questions does anyone have thus far? Maybe specific stocks that they would like me to cover. And then we'll go into maybe speculative or any that you may have on your watch list for winners in 2026. All right. Winners in 2026. I'll mention one right now. We'll get into it. I'm really got my eyes on Oracle. I'm wondering if it's a massive opportunity or do we got lower? But Oracle, the concern with Oracle, that if you don't know about what the concern is, and sometimes I don't play too much in the concerns of things, I just keep them on my side watch, is Oracle, it does have a good amount of debt. Oracle popped so aggressively, if you don't know, right here from the last earnings report with the possibility, or excuse me, the announced partnership with OpenAI. Okay. OpenAI is also on the horizon for a potential IPO this year, right? So if OpenAI comes onto the stock market, right, probably overvalued because they have an extreme amount of debt and all these promises and partnerships, and they're in quote unquote cahoots or with all these companies, is that a good thing, right? That's the question I have up in arms. But if I were to look at just from a technical aspect, what I was doing on Oracle is I was kind of going here and looking at this and saying, this is sitting right at a monthly retest level. Okay. If I were to look at these high volume nodes, I mean, can it pull all the way back to the low 100s? Yeah, there's always a possibility. Can someone say that there's a lot of overhead supply slash resistance here and it consolidates here and that's a bear flag and it pulls all the way back down there? Yeah, that's a possibility, but that's why we have stop losses. Okay. What I'm looking more so is when something is pulling back this aggressively, right? What I want to see are higher time frame supports holding, just like I said on the weekly. So look at what Oracle's doing right here on a monthly time frame. Monthly pullback in November, held 185, 190. Okay, had a little bit of struggling time again in December, held 185, 190. And again, turned this monthly candle into a green candle, and we have held 185, 190 again on Oracle. Okay, if I were to look at the RSI on Oracle, okay, is it a little bit oversold on a monthly? Yeah, it's on the lower end of the range on a monthly. Okay, on a weekly, again, lower end of the range down here towards the 40 mark. Right, there's a possibility of rotation, very similar to down here. When it was there, it was roughly 150, rotated back to the upside. And then on a daily, it looks even better. Okay. So the shorter time frames, the daily and the hourly, kind of starting to cross and hold on the MACD, crossing there back to the upside. And then the RSI is also holding and start building a little strength there. Okay. So I'm building a thesis to say this might be worth a try, right? It might be worth a try to watch this week and see is this an inverse head and shoulders kind of potential here, right? Back to the upside. Because you see all that support right there at 190. It failed underneath 190, reclaimed 190, failed underneath, reclaimed 190 again. So that's 3 different times that it's tried to get below that 190. And people are accumulating down here, in my opinion, trying to say, is this a little bit overcooked? Is this a little bit overdone in the short term? And I'm willing to take a risk to reward to say, as long as as long as Oracle holds probably this 180 to 185 mark, I'm willing to keep my stop loss below the lows, ideally below that 185, because it gets back below that 185. That's a failure of that one and could come down into the 170s and lower again. All right. So watch out for Oracle. What does that mean? Watch out for those that want long-term investments in it. You could dip your toes in there, not financial advice, obviously, but you could dip your toes underneath 200 on some shares if you'd like. Okay. As well as maybe some bigger swing call options that you may want to try to dip your toes in. It's still a little bit early. Their earnings aren't until March. Okay. So could they run into earnings? Yeah, very much a possibility, right? Could they start building some strength and some good news and some earnings potential into March, and we're back up into this low volume area and we're all the way back up at the mid 200s and approaching 300 back again? Is that a possibility? Yes, it is. Okay. So I would consider this more so accumulation phase down here where investors are potentially accumulating, right? Consolidating, sitting down here in this area saying, okay, that's enough. Okay. We're willing to take a chance on this a little bit to see if this holds and see if we can at least get back through this first gap, which will be back underneath 200 or back above 200, excuse me, and then ultimately back into this 230 mark. Okay. So Oracle, sleeper, all right, calls above 197.25, puts below 195.57. Yep. So you can keep it simple there. Keep it simple there in the short term. Yep. So yeah, I do love that 10 veer. Short term, keep those levels above. It's kind of in this kind of channel consolidation. So if you're a person that likes to draw channels, I would draw a channel like that. Okay. Popping up here, coming back here, popping up here, consolidating. Can't get above that. Like you said, 10 veer gets above 200. We can start working our way up. Fails back below that, 197, like you said, then we can start working our way back to 190 and this gap fill is back in play. So would I chase? No. Maybe I'd watch for maybe a daily close to see if we close higher above 200. Then that will maybe give a little bit more confidence on a daily close above 200. All right. For my Palantir folks, what's going on? I do see the after hours gapping down a little bit here. So the futures market is pulling back already. Where are we? Right into 190 SPY. Look at that. I tell you. If you don't know what I'm talking about, look at this overnight here. And if you're in your Robinhood or other brokerage and you see it as well, what did we just talk about live here roughly 30 minutes ago? SPY pulling back to that 690. Whereas QQQ back to 622, right? So there's going to be a large gap in the morning. So what do you think is going to possibly happen since that support? If that support holds, we could fill that gap back to the upside. And then ultimately we decide where we go from there. Okay. So if we're rejecting that aggressively right now with the futures, and right now Qs are down into this 622, okay, what does that do? That produces a higher low. There's going to be a gap back up. It fills that gap very quickly. Do we continue through it, or do we reject? And then there's your lower high and we come down like that, right? So that's the tricky thing sometimes, and why I think futures are very popular right now is because a lot of these moves are happening in the after hours. So you have to adjust yourself and keep your head on a swivel as you show up to the market the next day to say, man, that was the level I was waiting on to trade. And it already happened before the market opened. Exactly. That's why these stock sermon Sundays are here, so we can have both ideas. All right. Looks like NVIDIA is going to be underneath that 184. Okay. So can we get that little move on NVIDIA, start off the week, and we start getting a weekly pullback? AMD almost to that 200 mark, underneath 200. There we go. Start working our way down. Let's see what else we got. I'm gonna start wrapping up here. So if y'all have any insights, you're more than welcome to put it in the chat. So I'm going to put Oracle at the top. I'm going to look at our healthcare as well. So HIMS, I've got an interesting eye on HIMS. I'm still watching. I'd like HIMS back into underneath 30 if possible. I'm going to be watching that. I'm also watching Oscar in the healthcare space. For those that are new to the channel, I have a doctorate in pharmacy, so that's where the doctor is real. It's not some fake doctor just to call myself doctor on here. It's in pharmacy. So the healthcare space, I've been researching very keenly on these new healthcare companies in healthcare tech. So this Oscar Health, I'm looking at this bull flag here above 15, ultimately looking for mid 20s and then into the 30s. All right. So watch out for this as well. Keeping healthcare on your side watch. We did invest into CNC during 2025 towards the end and middle. Ironically, I had an internship with Centene during pharmacy school, so it was very, it's not insider trading or anything. It's just I know more about Centene. A lot of mentors and whatnot worked for Centene, so just the company in general. It's based in St. Louis. That's where I went to pharmacy school. So Centene there went down into 25. It was fairly inexpensive. It has already doubled from our entry at roughly underneath $30, and it's almost back to 50. So if you get a pullback on Centene, maybe keep that on watch. As you can see, it had a drastic drop, very similar to UNH. And this is a beautiful, in my opinion, kind of bullish flag maybe forming here. They can continue all the way back up, approaching back into 100 and so on and so forth. Okay. So Centene, keep that on your watch. UNH, a lot of questions there. I know it's pricey for some, cheap for others, but UNH, 300. As long as it's above 300, UNH trying to build its way back into the 400s, 500s. So I'll just keep 300 on watch. If we can get a deeper pullback for some weird reason, earnings is coming up at the end of the month, so we do want to keep an eye on that on UNH. Building strength, curling back up, breaks above 400, we're off to the races. Okay. Novo, another healthcare company. Shout out to my boy James in the community for putting this on watch. It is a slower mover, so I would say shares would be, a lot easier to do. But if you want to look at leaps or bigger swing call options for a year out or 6 months or more, okay, 50 would be my ideal pullback. As you can see, it's already gapped up enough here. If we can get a pullback on this a little bit closer to the low end of the 50s, maybe keep an eye on Novo if you're interested there. As you can see, breaking out of this extreme monthly falling wedge, so to speak. and kind of curling out of here, basing right here at 50 and curling out, headed back towards the upside. And if I put a Fibonacci retracement tool here from the highs to the lows, our golden pocket is sitting right above that 66.86 level. Okay. It starts getting into there. That's where big money is really going to start picking this up, and you're going to start seeing it squeeze. Okay. If you want an example of that for anyone that's new, look at Dollar General on a monthly chart. Looks very similar, right? You get an extreme pullback monthly. Okay. I do a Fibonacci retracement all the way back from the monthly highs to the monthly lows. Look what happened right in that golden pocket. It formed a beautiful bull flag there, and then it's now taking off back to the upside. Okay. So Dollar General, just absolute monster there. I think Dollar General will be $300 back again. So do you see how, for those, that want to hear this, do you see how some of the outliers are not the sexy stuff? Okay. The outliers are now, your basic kind of, no offense, but kind of boomer stocks, places that you might go to on a road trip, things that are useful, right? Your Lowe's, your Home Depot, those are taking off, right? The Dow stocks, McDonald's, okay? Curling up, HD, right? Taking off there off of that level of 350, okay? So I've got my eye on some of these Dow stocks, to be honest with you, and healthcare. And then I'm trying to see what volatility will bring with our tech. Okay. One last one here, a couple last ones that are inside of these. Man, my mind's going blank. I'm sorry. Inside of my semiconductor / a part of the semiconductor sector, technology. D-Dog, I want to pay attention to this, okay? It had a great earnings report, and it's pulling back from its earnings pretty significantly here, okay? So if you look at the D-Dog chart right there, I know it's a double top. I know it looks aggressive back to the downside, but if I put on a monthly chart here and I look back at maybe this 120 level, 115, it's starting to get a little bit overdone in my opinion, okay? The RSI on a daily, RSI on a 4-hour, starting to get really overextended. And I want to pay attention to what it's doing here. Now, the only concern is it's underneath the moving average stack here, underneath all the moving averages, which for those of you that have been paying attention, that's a little bit of a concern, meaning that I want to, be mindful of, is it a solid company? Is it something that's producing more and more revenue growth? Does it have any partnerships? Because the last earnings report was amazing. Okay. So it pulled back from the last earnings report. Does big money want to pull it all the way back so it can say, man, earnings report was great last time. Let's roll it back up and get this a $300 stock. Okay. So I'm doing my due diligence on there. CoreWeave, another one here that's very interesting. Okay. Consolidating here above 80. We've got a high volume node at 70. And I'm watching this to see what it does. It needs to get above this 85 to start taking off, which would be above that daily 50, and you'll see CoreWeave at 100. So I would definitely watch out for this to see what it does in this consolidation. Okay. If it starts building out of here, maybe you get a close above 80 or 90. Ideally, you can start really getting a little bit more quote unquote bullish on CoreWeave for the short term. Okay. You can see that previous IPO high right there at 65 held that IPO high. So that's really your line in the sand, is the IPO high. Okay, from IPO right here, and some people may consider this, but I would just say this IPO high right there at 65 broke through that. You can see that support holding, and it's holding right there. Okay, sitting on the daily 20. Okay. Watch for Architect. Yeah, Rocket. Come on down to 685 on SPY. Yep. Okay. Rocket companies. Oh, this one looks great. Yeah, this is, oh my gosh. Tanvir, thanks for bringing this up. I appreciate it. This is one that was definitely on my watch that I definitely forgot about, so I do apologize. So Rocket companies above 20. Okay. Rocket Company's above 20. For those of my gap fill people, I mean, it's like, oh my goodness, this looks absolutely ridiculous. Okay. I would say this is share territory and potential leap territory, because you are chasing a little bit here on, because it is a smaller stocks, quote unquote, at least for now. But shares for sure. I mean, you could easily double up your shares. Not financial advice, but above 20, you could easily double up shares from here, building nice strength, breaking above new highs there. Maybe pulls back to 20 or holds that 20, but beautiful trend line there. All right. And I like this breakout of this monthly consolidation. This is how Robinhood was looking for a while. Sitting down here, right? At one point, this is how Palantir was looking when we got Palantir underneath 20. Look at that Palantir move right there. See how it's basing, breaking above new highs, and it finally proves itself and takes off. So I definitely want to move this to the top for sure. Okay. I appreciate that 10 beer. So $20, you can see it clear as day right there. This high volume node. See how I just took off of that 20. So this could be, something you want to keep on watch this week, just in case it starts breaking above 25, starts moving towards 30. Next thing you know, it's all the way up there. Okay. Yeah, I like that one a lot. It was another one, R key. Was it this? That's already ran. I was looking at that Rocket Lab. APLD. I'll just kind of scan around some of these that ran like crazy from last year that already extremely bounced. Nebius. It's not bad there. Not bad. Building a little, again, very speculative, but also proven. All right. Just ran extremely in 2025. You can see the yearly candle there. From the lows, it ran from $19 to $141. So, yeah, can this be buy zone one? I marked it there underneath $100 for sure. But all right. Universal Mortgage, can't remember the ticker. Universal Mortgage or Unified Mortgage. Okay, I'll pull that up really quick. I'm rounding out here, everybody. So please, keep in mind what we got going on here is also our weekly analysis. It's an idea. I want to build things out. If you have your due diligence and you want to bring it to the table of what you're looking at, or excuse me, doing your due diligence of what you're looking at for long-term investments, or maybe you have some things in your portfolio that you're looking at, you want me to maybe chart on here, give you my idea of the best levels. But dollar cost averaging is an age-old thing, right? And you may hear me say, yeah, wait till this level, wait till that level. If you're convicted in something, dip your toes in it, right? Dip your toes in it. What I would say, what I like to do is if something is a little bit more speculative, like for example, when people are chasing CoreWeave has an extreme amount of debt. It's one of NVIDIA's biggest investments. So of course it's going to have a lot of hype around it, right? But ultimately these companies that are not yet proven with revenue and EBITDA net profits, you have them that will pull back 70 to 80%. Okay. That pull back 65%. So when people say, well, what about this company? What about that company? If it's not yet proven, I'd rather see it pull back 70 to 80% of its highs, which CoreWeave has done, and then take a stab back at it. So when I go over to, for example, maybe a Nebius, is that a technical level? Yes. I probably need to do my due diligence on it a little bit more. What's the other one? It's Nebius, and there was another one I forgot. Lyft, I think, still looks really good. Yeah, I can't remember. Oh, I agree. 10 beer. I think that in the next year and a half to 2 years, right, we will have some type of 2022 situation where big tech gets rotated out of. AI is not going anywhere, as we know, but it might take a cool off because the last 2 to 3 years have been AI. We might cool off, let the true AI companies step in, right? Prove who's true, and then we get a true move, right? Yep, you're absolutely right. Iron. Okay. and CoreWeave. Yep. So those three, I would say Iron looks the best as far as the chart, CoreWeave as well. Nebius, I'd say I'd probably want a little bit deeper pullback, but I think this looks great on Iron right now. I think this looks like a inverse head and shoulders. It's inexpensive enough. I don't like to say cheap, inexpensive enough to hold this kind of $40 level. But could we see a deeper pullback on this all the way back down into here? Yeah, it's always possible where this could come all the way back down like that, right? So keep your stop losses, but holding that 40 level, I do like that, rotating back up on something like Iron, CoreWeave, Nebius. All right. Did this help everybody? I'm going to round out right here. Did this help everybody tonight in some form or fashion? If you felt like it was a little fast, if you felt a little bit overwhelmed, right? Come back next time. If you felt like, man, I didn't know what question to ask, please join our newsletter for free. No strings attached. Message our support team. I do respond to questions there. Maybe it's not something that you had a question about here, and we can make sure that everyone's supported. All right. Let me read the chats here to make sure everyone's good. Freddie Fannie Mae ordered $2 billion. Yep. Michael Burry disclosed a massive short on Oracle last Friday. Yep. I think Oracle can pull back more. I think that debt. Perfect. I found you too late and already invested last year in another group. They are great, but your daily videos and Stock Summer Sundays are awesome. I appreciate it. Yeah. Cool. I appreciate it. Yep. So if there's anything that y'all would like to see in the future, maybe it's some like, hey, Brian, like, do you have a level where I can just get your TAs, right? Where I just see your chart, you post your chart. I thought about that, but I don't want to offer too many things. So if that's something that you would like, please let me know. We are coming out with our courses. So I know there's a lot of new individuals that, yeah, we have free value on the videos, right? But some folks have said, hey, this is a lot. I don't even know where to start. I don't have organization. Like, which one should I start with? So if you want a condensed version of that, we will have some mini courses that will be coming out. Basics of options trading, stock market analysis, how to read fundamentals, how to know how to read earnings, all those kind of things, and just keep it very, very simple. All right. DR. Okay, cool. All right. Thanks, y'all. Thank y'all so much. Peace, love, and blessings to you. Have a blessed week. Trade safe. I will see some of y'all, most of you, inside of our trading floor and trading room tomorrow for live trading. And I will see some of you on our newsletter, all those good things. I'd like to learn futures trading on prop firms. Yeah. We could definitely talk about that. Yep. Cool. All right. Peace, love, and blessings. Talk to y'all later. Bye-bye.